The market pushes higher on CPI. Is Wave 4 done? This is Invest with Jacob. Okay guys, so in yesterday's video we talked about the fact that they had come down to the first level of support, and while we could see a bounce and then lower, it was also possible that Wave 4 was done. The CPI data came out, the market ripped higher, NASDAQ made new highs while ES tested its highs and pulled back slightly at the close. So the question is, are we done with Wave 4? I'll get into that in just one second, but first, if you're new here, welcome to the show guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the chart, a little change of plans today. Yesterday was a trend day up, and trend days are the enemy of day traders. You just don't do anything except watch it because you don't want to chase, and the pullbacks aren't very good. So nothing to show you on the indicator. If you haven't seen that, check out any of my previous videos. The indicator we built is incredible. It's incredible on the weekly swing trades. There's nothing out there like it. And it's really good at day trading as well. So make sure you check that out. But for today, we're going to talk about the value of my room and what you get in there before we jump into our charts. And all the way back at the beginning of the year, I told my people about gold. And the reason was we were in an excellent 1-2-1-2 setup looking for a breakout, and that's what we saw. So let's jump into that chart and take a look. All right, guys, so here we are on the daily GLD chart. And this is what I use to track gold. You can use the gold futures. It doesn't matter. They're basically the same thing, just at a 10% different level. But we were looking for this 1-2-1-2 breakout setup. Right here at the beginning of the year, or at the end of the year, we saw the breakout start. I told my people to get into precious metals, as you can see on the screen. And then the S&P has been up 28% this year. It's an incredible year on the S&P. It has flown. I have warned about the risks of being in the S&P because it was in late cycle trading. It still is in late cycle trading. It rose 28%. The gold futures, or the gold fund that I had my people put their money in, is up 31.5%. So we're over 3% higher than the S&P by shifting into precious metals, understanding their Elliott Wave setup and where they should go. We're looking at a target of about 303 to as high as 400 up here at 397 with a natural target of about 339, 340. So we're still looking for a lot of upside in precious metals. That fund on the screen there you can see is outperforming the market. Our 401ks are crushing, and this is the kind of stuff you get in my room. On these videos, I give you very generic updates on the market to give you an idea of where we're headed or what the key levels are, most importantly. But in my room, we talk about trade setups. We talk about how to manage your 401ks so that you can find better opportunities or the best opportunity. And we talk about other stocks on my midday call. So it's an incredible environment. We'd love to have you in there. PT's room as well. We'd love to see you in there. Check it out, guys. I think you're really going to love it. Now, let's jump into the charts and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And last Friday, we took a short basically at the highs. We were maybe a point off of the highs or so, SPY point off the highs. We took it up here on Friday. And on Tuesday, we sold that short down here before Wednesday's CPI. Why did we do that? Because we reached a key level. I told you they needed to break through this level. And should they break through that level, we'd be looking at the 5950 to 6,000 area. They were unable to fully break. They poked below it right here and then got right back above it, and then CPI stayed above it. So they were unable to break this level, but we were able to understand where our key resistance was, get a short here, and trade down into here. We traded from the high basically to the low and collected on that swing trade. So a swing trade winner there, just a ramp up on CPI today. And they've come back over the 764. So 6094 was the 764. They poked above it. Now they're back below it. It certainly is possible that we could see a bigger wave 4 where you see a sharp move down into that 5950 area. This is an acceptable depth for wave 4, but in diagonals, you tend to want to see them come down into wave 1 territory, and that's what you would expect to see. Now, they don't have to. That's not a hard and fast rule. There's only 3 hard and fast rules for Elliott Wave, and I teach those in my classes, but that's not a hard and fast rule. That is a guideline and a expectation that you would normally see. So the ES definitely still has the ability to come down, break through, and make this a wave 4. Now, do I think that is likely? I don't. There's a few reasons for that. One, we're getting into seasonality that's bullish. Two, the volume is low. It's going to be harder to break down the market. And also, the resistance at 6,100 has faded a bit. The call walls that were up there and the very strong call positions have diminished, meaning it will be easier for the bulls to push through this level, and when they do, they will squeeze and likely get to 6,200 pretty quickly. But we would look for a B wave, and where that B wave comes from is to be determined, but that's what our trading point is. We're looking for a pullback that holds, and then we're looking for a move up off of that pullback that you can buy, looking for that 6,300 area as the next move, because this is going to be an ABC. Remember, we're dealing in a diagonal. You have tons of overlap down here at the bottom. Off of this low, you have tons of overlap, and then you have tons of overlap going up in 3. So it's a diagonal type structure. We are looking at it that way, and that means you're getting ABCs instead of 1 through 5. And so this wave 4 is going to come up in an ABC scenario into that 6,300 area. I'd like to see a little higher for this A wave, so this definitely could be a 4-5 where they push above 6,100 a little bit, give us a look above and kind of fail situation, come back down into this 60-50 or so area, and then launch. That's what we're kind of looking for, is this pullback to buy. So we could see a 4-5 to finish up this A wave, and then we'd look for a pullback and up. Now, when I say 4-5 to finish A, that's because we're talking about the C wave of A, and C waves are 5-wave structures, just so you don't tell me that A waves, and A waves can be 5-wave structures also, but at any rate. So we're looking for that ABC type move, and we're looking for 6,300 overall in the next push higher, and our buying opportunity would be any pullback that holds and starts to move back up. We can either buy at the breakout when they break above the highs, or we can buy off of the low after they move up, with that low being our stop. It's a very good risk-reward opportunity at that time. So we'll see what they do tomorrow. I'd like to see, like I said, a little bit higher in this A wave if that's what we're going to do. If it's B, we should see a pretty sharp collapse over the next couple days, and that would take us back down into that 59.50 area. Over on the NASDAQ. So on the NASDAQ, the 4 was very shallow, but it did come into that first support area we talked about here. It was unable to break down below that. So it did hold this upper support level where they could have potentially made a little mini head and shoulders here and come down a little further into our 21,150 area. I did say yesterday, because they were so much higher up than the ES, I did not think they would get down to this area, and that did come true. And the NASDAQ does portend that the wave on ES will be an A wave and not a bigger setup for wave 4, because the NASDAQ blew through its all-time highs here. And if you've been watching the channel, you know that I've said for a while now that the NASDAQ will outperform the ES on the next run up, and it should be pretty strong, like 2 and 3 to 1. And today we saw that again, as the NASDAQ was up 1.81% and the ES was up 0.77. It was 1.1% higher, or 1.04% higher than the ES, and outperformed very, very strongly. So NASDAQ continues to outperform as we would expect in this situation. So if you were listening back when I said you want to be on the NASDAQ train if the bulls come back, good for you. That was an excellent opportunity to get long and hit this big run up that we got here from the NASDAQ. Again, because the NASDAQ didn't break down, it is possible that this is 4 of 3, 5 of 3, and then we see wave 4 and 5. That is a possibility. We'll have to see what happens if and when we pull back here. It is also in a diagonal structure because of all of the overlap down here at the bottom. And that means this is going to take place as an ABC, and we'd be looking for that 22 to 23,000 area, 22.5 being the average there. But that area is where we're looking for the market to kind of reach to top and then roll over in a much bigger way. Now, if they do break below yesterday's low or Tuesday's low on either chart, that is a little bit of a warning to the bulls, as this should be pretty strong support for any pullback. Breaking below that would take us down to 21.50, and then we'll see what happens. And on the ES, breaking below should take us back down to that 6,000 level, and we'll see what happens. So we'll see what, if as long as they hold this low, we are directly bullish to 6,300 and 23,000. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to be part of the trading group. I want you to understand what's going on, hear the messages that I get out, be on these afternoon calls. These afternoon calls are about an hour long, 45 minutes to an hour long, just depending on the day and how many questions we have, where we go over so many things and so many charts and how to protect your money and where there's good trading opportunities. Everything you would want to know about the market we go through. We go through training on how to trade, how to understand price action, all that different stuff. It's really a great group We'd love you to be a part of it. And you get that 7-day free trial. You can just come and listen for a week, never trade, and see if you like it, and then get out if you don't. You have nothing to lose by checking us out. We also have our training material, and we have our indicator. So our indicator I talk about every single video. I didn't this time because nothing happened today to check out. But it is $59 a month. Check out any of my other videos. It absolutely kills the market. It makes it easy. It shows you how to trade. It's a trading view indicator, so you do have to have a trading view account. Check that out. You get a 30-day money-back guarantee on that. You try it out. You don't like it, no worries. 30-day money-back guarantee. That's how much I love it and think you'll love it. Our training material, we have our Elliott Wave for beginners and our advanced Elliott Wave courses. These are helping traders understand these complex patterns, how to trade them most importantly. So Elliott Wave is an art form and a science, and sometimes you have to fill it out after the fact, and that's okay. We're looking at the key levels and where to trade. We don't trade everything we talk about. We trade setups, and that's how we know, and that's how we make money in the market. We understand good setups, and we know when to take them, and that's what we do. So these courses help you find those setups, help you find those patterns, and understand the market in a way that makes sense. In our advanced course, we go through the more complex patterns, and that's going to be your advanced fib levels, diagonals, which we're looking at now, very difficult overall to chart and understand, double and triple threes, flats, triangles, and trading Elliott Wave. We go through a big section on just how to trade overall so you can understand where these levels are and how to trade them. As you can see on our screen, our traders are loving this stuff. They're making money because of it. They're understanding the market. But if you're new to the market or you want to start from the beginning, we have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. What matters in the market is key levels. It ain't about being right or wrong. It ain't about up or down. It's about knowing where support and resistance are, how to trade off them, what a setup looks like. Elliott knew this. He knew that the news was absolutely garbage and no one cared. He knew that key levels matter, and this gives you a huge advantage over the rest of the market. In this course, we have 25 videos. We introduce you to Elliott Wave Theory, get your mind right, get your emotions down, go over the KISS method and why all this works. We go through the chart setup and tools, every tool you need with Elliott Wave, why and how we use it. And our Elliott Wave for Beginners area where we go through all the waves, the corrective depth theory, the pivot, everything you need to know to make sense of an irrational market. The cool thing is if you want to get both of these at a discount, we have our bundle pack where you get $37 off by getting both courses. But if you want to get them for free, check out our membership plans that I talked about, guys. These are awesome. The training material you just saw is free in these rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go through several different stocks, everything you need to know, all of the counts, make sure you're up to speed, and make sure you guys are happy and have your money in the right place. And you also get all of the training material we just went through, all for $49 a month. It's crazy. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room. If you're looking for futures trading, individual stocks, income trading, or advanced training, you need to check out at PT's Throne Room. In there, you get everything you get in my room, as well as individual stocks. You get futures trading. His income method trading training style kills the market, and his advanced training gets you a reduced risk binary method, something you kind of have to see to understand, where he gets you in at a small price and get you big multiples on your money. That's another reason we give you that 7-day free trial so you can check it out and make sure it's for you. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. Market came up to resistance and has turned down a little. We will see if we get a little bit of a pullback, a hold, and then a launch in wave C. I would like to see kind of a 4-5 here, so I'd like to see that and then this. But in any case, we're looking for a pullback that holds that we can get a long on and then look to trade from there. If they do break down below Tuesday's low, that would be a warning that we're headed back toward that 6,000 area, and then we would have to see what happens there. But it would be a little bit of a warning to the bulls overall. On the NASDAQ, they are already above the highs. We would look for a little bit of a pullback. You'd like to see kind of this 4-5 play out, then a pullback, and then a launch. That's what the ideal situation would be. Sometimes you don't get those, but if you get that set up, that's what you're looking for to trade. If they break back below Tuesday's low, that is a warning that we're probably heading down to 21,150, and we'll see what happens. There's another major support level there. And if we do break through that, that's a warning to the bulls. Guys, that is your market update for today. I will talk to you tomorrow.